What's good, wealth builders? It's the man, it's the myth, the wealth builder himself, Devon Put on Work Burke. And today we're talking about how loans work before you go out and get one. Let's go.
To say that I'm on my grind is an understatement. Don't think I'm thinking you can check my bank statement. I'm about my money, yeah, that's a basic. World domination is what I'm truly facing.
Okay, before we get started, make sure you subscribe to the channel and share this video, because we talk about making more money, saving more money, building a better you and business. So without further ado, let's get to the topic on hand. How loans work before you get one. Alright, so let's go. Alright, you ever heard the term the rich get richer because they use other people's money to make money? Right? They don't use their money to make money. They use other people's money to make money. OPM. Other people's money. Now, basically, how they do it is they take out a loan and they use that money to invest in something that will pay them back fast enough to pay off the loan they took out and still turn a profit on said investment. Now, this sounds cool and all, but what if you don't even know how loans truly work? Well, if that's the case, I'm gonna break it down to you. Break it down. You know what I'm talking about? Wealth Builders Way. AKA simple as I can. Alright, so let's get to it. First and foremost, before you try to take out any loans, please, you should make sure you have really good credit, because this will determine a lot about your loan and how much you can get, how much you're going to pay back in the long run, okay? So please work on your credit. If you need help in that department, check out the link below and get started building your credit today. All right, there's a link in the description for that. All right, so, and it's okay to pause the video and come back to it if you need to, but just hold on. Just wait to the end of the video. All right. Now that we've got that out the way, let's break down some key terms inside of a loan, right? Like, there's a few terms that people might not understand, just don't understand. So I'm gonna help you out. All right, boom. The amount of the loan is considered the principal. It's the amount before any interest is calculated. Term of the loan, this is the amount of time it's going to take to pay back the loan. Some loans have a set amount of time, and some loans are revolving like credit cards, where you can pay it off and use it again without taking out a whole new loan. Interest rate. Now, this does not mean how interesting a person is either. This is the amount the lender is charging you to take out the loan, specifically, okay? Now, the boys at the Feds, you know what I'm saying, the Federal Reserve, charges the bank an interest rate, and the banks charge you, the consumer, a higher interest rate based on your credit worthiness. This is how they make their money. This is why I stated in the beginning that you work on your credit before taking out a personal loan. If you want to learn how to do so, the link is in the description. All right, now, fees that come with loans. Oh, everybody hates them fees. I know you hate them fees. I hate them fees too. It's a bunch of different fees too. Trust and believe. But the most common is the interest that you're paying. That's a fee. That's a fee for taking out the loan. All right, now, the other fees are application fee, pays for the process of approving a loan. The processing fee, similar to an application fee, this covers costs associated with administering a loan. Origination fee, the cost of securing a loan, most common for mortgages. Now you have an annual fee also, a yearly flat fee you must pay to the lender, most common for credit cards. Got them late fees, you gotta watch them late fees. What the lender charges you for late payments. Most people know about that one. Prepayment fee, the cost of paying a loan off early, most common for home and car loans. So now you have the key terms. Let's talk about paying back the loan, because you gotta pay it back, right? Now, the formula for repayment is A equals payment amount per period, P equals the initial principal or loan amount, R equals interest rate per period, and N equals total number of payments or periods. Now, if you're looking for money to fund your business, then check out the first link in the description. It will lead you to the promised land of business funding. So, thanks for watching. It's the man, it's the myth, the wealth builder himself, Devon, put in work Burke, signing off for How Loans Work before you go out and get one. Alright? Do remember, wealth builders, we make more, we save more, and we build more. Peace.
To say that I'm on my grind is an understatement. Don't think I'm thinking, you can check my bank statement. I'm about my money, yeah, that's a basic. World domination is what I'm shooting